Hi, this is Mike Lembeck with Remax Commercial, bringing you today's Let's Talk About It. And today's, what I want to do is I want to go over some of the headlines that we're seeing, just the headlines, in over the last couple of weeks on the state of commercial real estate, residential real estate, what prices are doing, and how the market and the economy are kind of reacting to everything with these latest interest rate increases, the inflation numbers, just kind of everything in general. And it's not a lot of good news, to be honest with you. All the headlines are saying that things aren't looking that great. So let's get started and see what it says. The first headline is commercial real estate prices slide at a rate not seen since 2010. That's quite a bit of a statement. 2010 is when a couple years after the 2008 crisis was, and as you can see, prices, or at that time, were declining and at a pretty dramatic rate. And if we're at that level, then we're heading towards something not too great. So, second headline reads: commercial real estate prices could fall 40% this year in an adverse Fed planning scenario. And that, of course, is on the worst case scenario that they could fall 40%. But if you take the medium of that, of being, lowest being 0, of course, and the highest being 40, and you look at a 20% decline in real estate values, that's a pretty significant decline over a 1-year period. So, of course, obviously 40% in 1 year would be extremely dramatic and kind of unheard of. And I don't see that happening, but we may get there at a 40% rate in over a period of a couple to 3 years, and then where do we stand at that point in comparison to 2008? The next headline is the California home prices drops bigger than U.S. declines. A 20-city U.S. composite is off 6.2% from June's 2022 all-time pricing high. Another indication prices are coming down. That is on residential real estate, 6.2%. That's nationwide. Another sign that things aren't looking that great. Next headline is Southern California home sales fall to all-time low. The region's housing slump continued through January, with home sales down 43% and prices falling below year-ago levels for the first time in almost 4 years. So real estate sales are down 43%. Anytime you have real estate sales dropping that significant of a figure, then you're looking at quite a big hit to the economy. Putting mortgage brokers, escrow companies, termite companies, anyone who's related to a real estate transaction, their income is definitely suffering. And at 43%, it's half of what it was last year, roughly, a little bit less than half of what it was last year. So, it's putting a damper on everybody related to the real estate industry and what they have as far as spendable income, and what they can do. If they have to go out and get another job, get out of the industry completely because there's just not enough transactions, then that's what they're forced to do. Our next headline states that U.S. home value declines $2.3 trillion in biggest drop since 2008. Again, another comparison to 2008. That is a huge drop. You're looking at a mirror of what happened in 2008. I think we're seeing potentially something even worse than the 2008 recession. I'm hoping I'm wrong, but what I'm seeing, the writing on the wall does not look that great. And according to all these articles, we're not looking too good as far as having anything as far as a smooth sailing and recovery with the anticipated recession coming sometime this year, or at least the official calling of a recession sometime in the mid of 2023. So if things are going to get worse, then we're not looking good at all. Next article: the Fed's own economists are ringing the recession alarm and warning stocks and real estate prices could tumble. Another negative headline. This is the Fed's own economist stating that things could get worse than what they are. I've heard talks of a 20% reduction in the stock market. So if that takes effect, then obviously that's going to affect businesses, large and small, and then of course it's going to roll over into real estate, potentially needing more interest rate increases. Who knows what the Fed might do? It seems that even the interest rate increases aren't having the desired effect. Next article is Flying Blind, Instruments Only, Economic Landing Coming. A fog of uncertainty and unprecedented anomalies obscure the economic runway. So again, that kind of validates the previous one about the Fed's economists giving a warning. I don't know that the Fed really has an idea of what to do other than raise interest rates. That seems to be their biggest tool and only tool that they're using right now, and that's not having the desired effect. It's not bringing down inflation to all that dramatically. We don't even know if the reports that we're getting on the numbers that they're furnishing us are accurate, or are they just fudged numbers, and we're just having to try and decipher what's going on based on our day-to-day lives and the reality that we see. So I'd like to hear your comments on any of the information I'm providing, and love to see what you have to say. Like and subscribe. Like the video and subscribe to the channel so that you get more of these updates. When they come out, I try and do them on a daily basis. So hopefully you find this information useful, and I look forward to hearing from you. Have a wonderful day.